What's going on today? It's Tuesday, September 27th. I'm Frank Curzio, the Wall Street Unplugged podcast, where I break the headlines and tell you what's really moving these markets. It's been terrible, the markets. Last week was horrible. Monday as well, a little bit before that. It's getting wrecked. So it's nice to walk in and see the markets up about 200-300 points on the Dow today, around 1% across the board. It's nice to see green sometimes. And there's a reason for that, especially for today, where you're seeing a lot of people starting to come out. Not a lot, but big names are coming out saying, listen, the Fed's getting a little crazy here. They're getting nuts with these 75 basis point hikes. I mean, it's not just one, it's not just two, it's not just three. It's probably going to be four now in a row, which is insane. We've never seen that. We've never seen at this level. I mean, you can say 40 years in the 80s. I mean, we brought the Fed funds rate, we increased it, we doubled it, right? Now we're coming from zero, which is unprecedented, to all the way through 4.25% by year end, which is expected. And we're seeing mortgage rates starting to push 7% now. And it's getting scary because you're starting to hear from the businesses, starting to hear from the sectors. Chicago Federal Reserve President Charles Evans said he's nervous about the Feds going too far too fast. I don't think there's another Fed member that I've seen that wasn't 100%. We don't see any signs of inflation's moderating. Going all in. I don't care how much pain you see. I mean, this is the first Fed member, non-voting, so not that it matters. But it's making headlines. So he's nervous, meaning that with the Fed raising rates by 75 basis points in 3 consecutive meetings and about to raise by another 100 basis points by year end, he's saying it could be very dangerous. Given that we're not allowing the time to pass through from these current massive rate increases. We need them to filter through the system, and we're not even giving them a chance because it's every meeting. It's almost every single month. 75 basis point hike, 75 basis point hike. I mean, 25 basis point hike filters through the system. It takes 3, 6, sometimes 9 months. We haven't even seen the last 75 basis point, maybe even the one before that. And it's getting scary now because you're saying, well, we're not in a recession. Everything's going to be fine. I don't know if you saw globally what's going on. The dollar going through the roof. The whole world's investing in the dollar, expecting this crash that's coming. But the Fed's just ignoring it. Which is kind of interesting because not too long ago, a year ago, they were saying with 0% interest rates and buying bonds that inflation's transitory. Now you're raising rates by the fastest you've ever raised. And you said, there's no way. Now, no way it's going to be transitory. Yeah, Mohamed El-Erian has a similar take. And has really been going off on the Fed since last year, saying they lost total credibility when it comes to inflation. It's transitory, when we were at 5% last year. Remember, if we look at the inflation rate, which is based on CPI, which the Fed looks at, since 1992, on an annual basis, we never saw the CPI hit over 4%. I mean, it didn't hit 4%. We were at 5%, and they were like, hey, it's transitory. Nothing to see here. Nothing to worry about. Again, now they're raising rates by 75 basis points at each meal, like it's absolutely normal. Like this is perfectly normal. But you need to wait to see the impact of what's going on. Because it's significantly impacting the markets, and it's happening so fast. It's incredible. If you listen to the companies throughout each sector. And look at housing at a standstill. See, the recent price index from the S&P Case-Shiller said home prices falling at its fastest pace in history in July. Granted, it showed that home prices are up 16% year over year, which is insane. And I get it. Even more insane, if you break down those details, Tampa and Miami up 31% year over year, home prices. So yes, they're going to fall, but they fell, 3%? 4%? And this data is July. It's not August, it's July. So wait until you see the data from August, where mortgage rates were around 5%. They're pushing 7%. They're pushing 7%. They're 6.8% right now. You're going to see home prices fall at least 15% from these levels over the next few months, or at least by year end. Who's buying houses? I mean, you shut off the loan market. If you have cash, yes. If you live in Florida and Texas, yes. You're going to see demand still, and prices remain relatively high. But he essentially shut off the housing market, all the growth that's involved with it, within 6 months. Unprecedented. Retailers out of nowhere sitting on massive inventories when they've seen these supply chain concerns. Massive demand. We got to get everything up and running. Get everything. Stores full. All of a sudden, demand shut off in like a second. Have you seen the chip sector lately? Went from massive, unbelievable demand where we need to build fab plants everywhere, which costs probably $4 billion or more to build these massive plants, which take a year, at least 2-3 years, some of them to build. It's a massive process. Now, all of a sudden, in a blink of an eye, they have gluts. Many of these companies. But this is what happens when you raise rates this fast without pausing at all. Just to see, hey, let's take a step back just to see what's going on. You get massive shocks to the system where inflation is going to quickly turn into deflation while you're raising rates. Just think about it. The Fed truly believes, and they do, they believe that keeping rates over 4.25% for all of 2023 is not going to cause a massive recession. They're expecting 5% growth second half next year. How is that possible? With rates over 4%, the housing market, interest rates, mortgage rates, 7-8%. How is that possible? How are you expecting that? Where is it coming from? I mean, this is massive recession, close to a depression. But you're looking at these guys like, what are you doing here? I get it. You were wrong. All right. And I don't want to talk about the past. And it's so easy to just, shit on the Fed. Everybody does it. But right now, we're talking about right now. You need to sit back and wait. Because you're seeing demand destruction across the board, almost across every single industry, is happening immediately. And this morning, Cathie Wood was on Squawk Box. Always controversial. I love her. She's always bullish no matter what. Innovation, innovation, innovation. Bullish, bullish, bullish. Well, innovation works when you have a great market. But she was saying the Fed is going to have a major pivot to easier policy. It's going to happen soon. Just the U.S. economy is in a recession. I agree. She thinks inflation has peaked, which I agree. Because the market should be discounting the peak in interest rates, and she would not be surprised to see deflation over the next 6 months. And regardless of what you think of her, she is on the front line when it comes to the biggest, most innovative companies. And she's seeing this. Because she also went on CNBC to announce that she's launching a new venture fund with Andreessen Horowitz, and I forgot the other firm, raising money where they're going to give non-accredited investors a chance to invest in private, innovative companies. And she said something that was disturbing to me. She came out and said when it comes to accredited investors, that people who are not accredited investors in the younger generation are much, much smarter than these accredited investors when it comes to innovation because they are fully engulfed in these trends. She has a point. If you're looking at a lot of accredited investors are older investors, probably don't really know too much about Bitcoin, Roblox, people relate to Tesla and EVs and things like that. So I could see the point she's trying to make. Okay, I agree with that. The younger generation, holy cow. But they're not smarter than accredited investors when it comes to knowing how a deal is structured. And that's important. That's significant. You can say, well, some accredited investors don't, but a lot of accredited investors, you got your head handed to you, right? You got the shit kicked out of you a couple times. And you realize, wow, okay, these guys are raising money and they're doing it at $3 and they're going to go public at $5, $6, $7 and I'm getting in at $3. And the person who's doing it just said they're going to invest a whole bunch of money into the deal. They're already in it. They're going to invest another $1 million. What you don't know is they invested $20,000 and got 5, 6, 7 million shares at a penny. So yeah, it's nice to say, okay, we're investing a lot more in the next round, but at $3, you really have to look at valuations to see if it's a bargain or not, because the people coming in at $3, that's fine. But a lot of these people are in under $1 who are going to be selling the shit out of this as soon as it opens at $5 and pushing it down to $3, and they're going to be selling at $3 and $2 because they're at $1 when you were able to get in at $3. That's what we saw at SPACs. I mean, look at Chamath and Branson. marketed Virgin Galactic. I mean, it's not a terrible company, Virgin Galactic. It's innovative. It's cool. The valuation came out, it was insane. And that can only happen when you have easy money policy. You have a bunch of idiots saying, oh my God, I want to invest alongside these guys. When you don't realize they didn't put millions into this stock. I said it, broke down the stats, I think it was last week or the week before with Chamath. You spent like $25,000 buying millions of shares at 0.001, whatever. Then you got all these SPACs and pipe deals once they announce and saying, okay, well, it's going to come out at 10. We're going to raise even more money, and we're going to give these guys, stock at $1.50 and warrants at $2.50, and it's coming out at 10, meaning, when you see pressure on these things at 7, 6, 5, you're like, who's selling? These guys are making a fortune while you bought it. I mean, especially when it comes to the average investor, when it comes to Virgin Galactic, you're buying 15, 20, 30, while these guys are pumping the shit out of this. Chamath and Branson were pumping the crap out of this name. Why? So they could dump it. Made hundreds of millions of dollars. Could new invest? Because I talk to a lot of these innovative young people right now, especially with the amount of money we invest in the metaverse and what we're doing within DeFi, metaverse, NFTs, and what we're building here. And they are brilliant, but they're coming to us because they have no idea of how to structure a company. They have no idea. I used to think they were creating these tokens on purpose to rip people off. They just don't know. I'm like, stop ripping off your early investors. Create a real utility. Create some kind of demand where these investors are going to benefit. Because when they benefit, and if you sell this company, they do well, they're going to be with you for life. That's how I built my credibility over the last 30 years. But they don't know better. They don't understand that issuing 1 billion tokens and you have no demand and no utility feature, and all you're going to have is sellers unless you're pumping it through some kind of social media channel, which is Discord and Telegram these days. But it is interesting because, yes, it's nice for individual investors to be open to these ideas, but they need someone there to say, hey, you know what? I mean, who knows where Cathie Wood is getting in at? Is she getting in really, really early and doing a second round or a third round? Because she's invested in a lot of these companies where even though they're down 60, 70%, Cathie Wood made a fortune on these because she was in very, very early. And yes, you could say, well, she's down 45, 50, 60% on some of these names. That's from the highs. But she was investing. I mean, look at all the names she invested in during the very early rounds. It's how do you make a fortune? But I tell you, she did say something interesting about Bitcoin. That Bitcoin is going to reach 500,000 within the next 5 years. 500,000. It's 20,000 right now, over 20,000. And notice how it's been maintaining these levels. I mean, it's 18 to 20, 21, 22, around there. But over the past, month and a half, while stocks tanked, may find that interesting. How come gold's not seeing that bid? Well, the dollar's going up, but the dollar's not impacting Bitcoin as much as it goes higher, as it is with gold. People run into the exits. It's hard to invest in gold when 2 years yielding more than 4%. Why own gold? Stick in a 2 year. Why? Bitcoin's different. But you're seeing it decouple itself from the market for the first time in a while, but it's been happening. Again, maybe interesting saying, wow, how's Bitcoin holding up here? It's not that interesting if you do the math. If you look at the trillions that are going to have access to Bitcoin, to Ethereum, to some of the big names. Look at Ripple surging. And I'm going to keep it running. So basically what that is the emergency alert, because I am in Florida, we're getting a hurricane. So I'm going to keep that in here. Usually we pull it out and say, oh no, what happened? I have my phone on mute too, and that still comes through. But we are experiencing a hurricane. Not going to be too bad on our end, but yes, Tampa's supposed to get nailed. So we'll be reporting about that even tomorrow when it really hits. But yes, they're warning and going crazy. And again, people are worried, not really on our coastline, but the other coastline. But that's another topic, hot topic, that we're going to be talking about tomorrow. But getting back to Cathie Woods with Bitcoin, 500, it's 20,000, 500,000. I mean, you could say 100,000, right? Even that would be a bold forecast. But you're seeing the access to the institutions, and these institutions are going to give their clients access to Bitcoin for the first time ever, like the Fidelities, Charles Schwab, BlackRock. Don't take my word for it. Look for how much these guys, in terms of assets they have under management. From 4 trillion to 20 trillion. Trillion. Even if 1% comes in, you're looking at Bitcoin tripling from here. What is it, $300, $400 billion market cap? It's under $400 billion right now. They're going to have access to some of the biggest names. But this is where the money is flowing into, even in this market. That's why they're raising money in so many of these funds. NFTs, DeFi, Metaverse. You see Walmart. Walmart came out what? Recently, a couple days ago. Entering the Metaverse. Sign a deal with Roblox. Going to create 2 Metaverse experiences. One's called Walmart Land, and the other is the Universe of Play. And the second one's going to be a virtual game platform, right? Where they play kind of like video games and give away certain things. Get a blimp that drops toys and music festivals. They already announced a big concert with 3 major artists. Virtual stores, merchandise. But they're understanding how big the metaverse is, and 80% of the people who go there buy something. All the retailers are going into this space. But they're targeting what? Gen Z? 25 or younger? Millennials under 40? You look at Roblox, 52 million daily active users. They want that audience. That's incredible. Hayden, this company spelled Hadean. It's a Web3 metaverse company using computing to scale virtual and metaverse worlds. They just raised $30 million in a blink of an eye. This is over the weekend. $30 million. Who are they backed by? Epic and Tencent. 2 of the biggest in terms of gaming. You're seeing money continue to flow into this area. This is where the world is going. This is where the innovation is going. You're going to continue to see money pour into these sectors. I'm just amazed by the amount of money, especially given these current market conditions. Ford announced last week they're entering the metaverse and NFTs. They filed for 19 trademark patents. They're creating this open platform, not a closed platform like what you see on Roblox, where Roblox makes the money, Walmart makes the money. No. Ford, I like what they're doing here. It's an open platform where any developer can build a car, use digital artwork, would likely share profits with Ford. But this is what an open metaverse is all about. It's unleashing talent around the world, not just the talent from developers you have under your own umbrella. You have tons of amazing developers out there that are going to be able to take advantage of this opportunity. That's what the open metaverse is about. And instead of getting locked down with a company and making $300,000 a year where you're generating, $25 million in profits for companies based on your ideas, now you can go to these companies or create through their website, and Ford's going to share probably a large percent of the profits with you. And you're going to have ownership of a lot of this stuff. It benefits Ford, right? If someone comes up with innovation for a car that looks absolutely amazing and it's going to sell, 5 million units of this car based on the design from someone else, they would do that in a heartbeat. They give someone $5, $10 million in a heartbeat. They're going to sell billions of dollars in this car. It makes sense. Benefits Ford, benefits the developers to be independent. That's what the open metaverse is. It's unleashing talent around the world. And these developers where, again, it's not just in-house people. It's the world, right? That's creating. That's innovating. That's the future. That's where this is going. And of course, it's the data aspect. You don't have to share all your data, or you're not sharing it. They're stealing it from you and making money off of you. And that's the model, right? Google, Facebook, I think that's the model. You get to use these sites for free, but they steal everything from you and give it to third parties that can email you, call you. I mean, I can't tell you how many people call me. At least 3 or 4 people call me. They know where I live. They're like, oh, is your house for sale? We could sell it if you don't even know me. I'm getting 3 calls a day from people, all these lists. Where do you think they're getting this information from? That's why the largest companies in the world are investing so much. The biggest investors, billions and billions and tens of billions of dollars into the metaverse. This is where it's going. People are sick of getting their data stolen. The open metaverse is what it's about. Good. Ford sees it. Okay, Walmart's testing. You're going to see Roblox benefit tremendously because they're testing. Plus, they have 50 million daily active users. So everyone's going to be testing on those platforms. Nike World's built on Roblox as well. See if people are purchasing stuff. And Roblox going to have an advertising model pretty soon. Now they just sell different products and sell different things and skins, stuff like that through their site. But that's a testing ground for Roblox. And then after Roblox, then they're going to realize, wow, let's go. They're going to do what Ford does. Let's open this up. Let's see if anyone else outside our company has ideas of how we can grow, and we'll pay them for it. Could be some kid in a small town in India that nobody knows about. It's going to come up with a great solution for a major problem that Walmart has, and you'd never have access to that person unless you had an open platform, an open metaverse. With that said, and those ideas, when it comes to equities, you have to be careful, you guys, especially in October. And it's not because this is where we see all the crashes happen. It's true. We just broke through the lows, and yes, we're up a little bit today, but we're in dangerous, dangerous territory. You have people going to see the statements for the first time, and they're not going to be happy. At the end of this month, they're not going to be happy. Yes, a lot of us have access to online. We see but some of them, a lot of retirees that don't have working power are watching their home price start to decline. Again, it's still up a lot, but hey, my home price is coming down. Now my portfolio is coming down considerably, down 20% plus, likely across the board, and really just got hit in September. What are you going to do? They're going to be like, wow, all right, I'm going to go to cash or buy the 2-year, generate 4%, not bad. Also, if you look at mutual funds have until October 31st to lock in capital gains. Of course, it's not going to be capital gains. It's going to be losses that they're sitting on. So that's for tax purposes. Individuals have until the end of the year. Mutual funds have until October 31st. It makes sense for them to be selling like crazy because they're sitting on massive, massive losses, many of these people. You can offset your gains, which is for selling. You're going to see lots and lots of selling and probably selling at the lows. So if you think something's down 25%, it's trading at a 9 PE and it's growing those earnings by 10%, you're like, this is a great deal. Be patient. Wait, because you're going to get a better deal. This is going to happen throughout October. Especially with funds who, 90% are underperforming and underperforming significantly? And this is going on during earnings season where many companies are going to be lowering or removing their guidance like FedEx did. Since every sector, one by one, is going to experience what the housing market, the chip sector, has just experienced. Massive demand, and out of nowhere, within a month, month and a half, 2 months, it shuts off. Demand destruction. That's what happens when you raise rates at this pace, this fast, this quickly. And while you're seeing this massive destruction in demand, consumers closing their wallets, what's happening? People are flooding into the dollar, which is up like 20%, where every 2% move higher in the dollar usually results in a 1% decline, or it's a headwind in earnings. 20% the dollar. So you're going to a 10% hit in earnings. Earnings, if you're looking at the analysts, which is what I do, Daniel does. We look at this, we look at earnings, they're not lowering. They're lowering, they're not lowering fast enough. And that's why you're going to see so many of these companies say, you know what, we're removing guidance, because you're going to be able to get away with it. FedEx warned, you're going to see other companies warn and say, we need to wait and see, because we really don't believe that, our earnings just got destroyed. We're seeing demand come down for most companies throughout most sectors. And yet we're watching the Fed tell us that they're going to considerably raise rates further and keep them that high through 2023 into 2024 for a full year. If you're a company and you really believe that the Fed's going to do that, which you should, because that's exactly what they said, and they reiterated from Jackson Hole, they reiterated again in the last meeting, and they keep saying they're going to do it, how do you offer guidance? If you're in a housing market, how do you offer guidance when everything's getting turned off and you just went from 3% interest rates in January to close to 7% and probably going higher? How do you order your supplies? How do you build houses? Yes, you have the current contracts under, and they're going to fulfill those requirements for many of these places. And yes, you still have a supply problem where there's not a lot of supply for homes. But even in the chip sector, we're sitting on this massive glut now. Where's the demand going to come from? All these auto companies, are these people who put down $500 for a new EV that you were supposed to get a year ago, and you did this 2 years ago? Now you just realize that EV you're going to purchase is 35-40% higher than what you were going to purchase it for. Are you going to pull that now and say, you know what, let me just buy like this gas vehicle instead of buying a brand new first generation car that it's going to get recalled at least 5 times because all these guys never built an EV in their lives outside of Tesla and scaled it. You're going to see it. You're seeing it now. I mean, Ford, the EV, almost all EVs that have been released have been recalled. That happens all the time. But even more because, the battery technology, you're going to replace the battery, whatever. Seeing lots of recalls. Going to run into lots of problems. They're trying to get these things to market so fast. They haven't been able to test them as they normally test them. We'll see. So the good news here is stay patient. Once the Fed stops raising rates, which, by the way, we've never seen the equity markets bottom as the Fed is raising rates during a tightening cycle. It almost never happens. You usually need to see interest rates top out, and they haven't topped out. They're still going higher. Maybe a little bit lower today because the market's going up. But still, the trend is higher. We haven't seen it. It never happens, ever happens. It's not going to happen this time. But for you to just randomly say, wow, I like this stock, I like that stock, it makes sense to buy this, be careful. It doesn't even matter what stock. And I thought Costco's numbers were really good. Yes, subscriptions came in a tiny bit light, but they 17% growth, I believe it was in sales, 11% in earnings, if I'm not mistaken. The stock was already down over 20% from its highs, and it got nailed on that news. Was it a fantastic quarter? No, but it was pretty good, and I guarantee that quarter is going to be better than 90% of the companies that are going to report going forward over the next month and a half. But look out. So we are going to have incredible buying opportunity, but you need to be patient. And for now, focus on some of the few things that are working. Bitcoin is working. Innovation within NFTs and the Metaverse is working. You see more and more companies become purer plays on that, not just a small portion of it. Like Roblox is a great play. I mean, it's down 70%. They're still growing and still signing up tons of customers. But at $30, 30 something, I mean, it seems like a steal down here. Uranium's not going away. I mean, that demand, even if prices come down and we see what we're doing with Strategic Oil Reserve, I know President's doing, keeping all prices low into the to election season. I get it. Makes sense. I know why he's doing it. Everyone knows why he's doing it. But it's, if you're looking at what happened to these companies, what happened in Europe, they're going to make sure for the next 30 years, they're never in a position like this where one country like Russia could just pull 40% of your energy and you're just stuck on an island going, holy shit, what do I do? You're sitting there with one of the best options in the world, safest, cleanest 24-hour baseload power available. That means all day, all night, not when the wind blows, not when the sun comes out. And you're seeing in Europe, I mean, they're going back to coal, right? Germany's going back to coal. Many European nations go back to coal. It's not a surprise. These climate change idiots don't care, but people are going to die unless they get heat in the winter, and they're in a lot of trouble over there. It's bad. Nuclear is the option. And uranium. So I'm interviewing Amir Adnani on Thursday. He's the president, CEO, co-founder of Uranium Energy, UEC. It's going to be on Thursday. Great conversation. Make sure you listen. But that's an area that, stocks have been volatile, well off their lows, but pull back from their highs. But wow, I think this is a great market. Government supporting it now. Our government supporting it now makes a lot of sense. But let's see when it comes to the market. Let's see how much some of these stocks sectors sell off, because even biotech looks incredibly attractive. Looking at names that are trading at or below net cash. If you look at biotech, this is a market that peaked in September 2021, so a year ago. The 4 or 5 months before the overall equity market peaked. And these things have gotten destroyed. 70, 80%, 80% plus good names that are actually generating revenue. That's a great opportunity. That market's probably going to come back a lot quicker. I still think it's probably 20, 25% off of its lows, which isn't really saying that much because they were down so much, but great opportunities there. But overall, going into next month, guys, follow your stops. You have to play defense. Buy puts, which Jenny Terranova has been doing in our Money Flow Trader newsletter. She just booked another triple-digit winner. She put the February 2023 put on EZU, which is the Eurozone ETF that tracks large and mid-cap stocks within Europe. So basically, she's betting against European equities. So get this. She bought this put last month and just closed out for 150% gain. And basically has been doing this over and over and over again for the past 10 months. Well, the equity markets have been absolutely crashing. And buying puts is not shorting. You don't have that unlimited risk, which you have to worry about. You're only risking the amount of money you put up to buy that put. Money Flow Trader, if I had to guess, guys, probably the best performing financial newsletter this year. I mean, nobody's even close. Very proud to have this product under our umbrella. We'll be doing a special interview with Ginia to get some of her favorite ideas going forward. We're going to do this behind our paywall for existing subscribers, all existing subscribers. So interested in Money Flow Trader, trying it out for 3 months, send me an email, frankcurzioresearch.com. You need to learn to protect yourself. If you're not interested, you think, oh, Frank's selling something or whatever. This is something I've been pushing as soon as the Fed pivoted in November. There's a fundamental change in the market, and forget that this is protecting yourself or hedging. This is how you make a fortune when the markets crash. Your greed meter should be going through the roof. Because if you're able to generate these returns while the market is coming down, you're going to be sitting on massive cash, especially through October, because this market is incredibly overvalued. It's either going to fall a ton in October or fall a lot over the next few months as the Fed continues to raise rates. It's going to be a very difficult market. But if you look past, the last 10, 12 years, if you look at these market crashes, they happen quickly. They happen fast, and then you see the markets rebound. Now, it's different because the Fed's raising rates, but the Fed cannot continue to raise rates and keep them well over 4% for longer than 3 to 6 months, even 3 months. And you're going to see it. You need to take a step back and watch the monthly data. Forget about the CPI since it's fixed and use shelter as 30% of that component. We saw inflation last month with energy prices crashing. Think about that. That's how much you're looking at rentals and shelter accounts for the CPI. Stop looking at that because that's not going down anytime soon. Listen to the companies. Listen to what they're telling you because we're looking at 2 rate hikes, 2 75 basis point rate hikes, and another one coming. The last 2 are not factored into the market yet. And you're seeing it sector by sector shut off. Demand destruction. Be very, very careful. It's going to get worse before it gets better. We broke through the lows. It's not a good sign. But be careful because it's going to create an unbelievable buying opportunity. But there's times to be aggressive, times to be patient, play defense. Play defense. You can do that at the Money Flow Trader if you're interested, frankcurzioresearch.com. And any questions, guys, during this time? I know it's rough. Getting a lot of questions. I'm here for you. frankcurzioresearch.com. Just feel free to send me an email whenever you want. Really appreciate all support. And I'll see you guys with Daniel tomorrow. Take care.